Hello and welcome back, my dear students. Exams are just around the corner. I know, things can get a little stressful, but don't you worry, your tutor Baya is here. Today, we're going to do something fun. Chalo bacho, let's put on our detective hats and solve a very interesting case about a company's financial statements.
Okay, so let's meet the star of our mystery, Ankin. He's a small shopkeeper, and what you're seeing here is his trial balance. Now, if you look at it, everything seems fine, right? The debits equal the credits, all balanced. So he thinks he knows exactly how much profit he's made.
But here's the big question. Do his books tell the true story? You can think of a trial balance like an Instagram photo. It might have a nice filter on it and look perfect, but is that the reality? Our job as accounting detectives is to remove that filter and find out what's really going on with Ankin's business.
So, to find the real profit, we need to look for some hidden clues. In accounting, we call these clues adjustments. And the secret to understanding them is one simple idea, the accrual concept. It just means we record expenses when they happen, not when we pay for them. And we record income when we earn it, not just when we get the cash. Simple, right? Let's see how this works. Okay, our first clue is something called outstanding expenses. These are basically expenses that belong to this year, but, we haven't paid them yet. The mobile bill example on the slide is just perfect. You used your phone all of March, so that bill is a March expense, even if you pay it in April. To get the true profit, we have to include these expenses.
So how do we handle this clue in our books? It's a simple two-step process. First, you add the unpaid amount to that expense in your profit and loss account. And second, you show that same amount on the liabilities side of your balance sheet. Yaad rakho, every clue, every adjustment has two effects. That's the whole magic of the double entry system.
Let's apply this to Ankit's case. His books showed he paid wages of 8,000 rupees. But our detective work found a clue. 500 rupees in wages were still outstanding. So we add that 500. And now you see, Ankit's actual wage expense for the year was 8,500 rupees, not 8,000. This tiny clue has already changed his profit a little bit.
And here comes the second part of the entry. That 500 rupees is a promise Ankit made to pay later, right? So it becomes a liability for his business. We show it right here, on the liabilities side of the balance sheet. See? Both effects recorded. Clue number 1 is officially solved.
All right, time for our next clue, prepaid expenses. This is basically the opposite of what we just did. These are expenses you've paid for in advance, but the benefit is for the future. Like when you recharge your mobile for 3 months at once. You pay the money now, but you're going to use the service over the next 3 months. So only this year's part of the expense should be in this year's accounts.
So what's the treatment for this one? Tension nahi lene ka. This is also very simple. Again, a two-step process. First, you deduct the advance amount from that expense in the P&L account. And second, you show the same amount on the asset side of the balance sheet. Why an asset? Because it's a future benefit that the business owns. Pretty cool, huh?
Let's go back to Ankit's case file. He paid salaries of 25,000 rupees. But our clue says that 5,000 rupees of this was paid in advance for next year. So what do? We subtract it. This means Ankit's real salary expense for this year is just 20,000 rupees. And in this case, the adjustment actually makes his profit for this year look a little better.
Okay, detectives, you guys are doing a fantastic job. We've cracked the simple clues. Now, let's level up a bit. It's time to uncover some of the trickier clues that you will definitely see in your exams. Are you ready? Let's go!
Our next clue is depreciation. Now, this word sounds a bit heavy, but the idea is so simple. It's just the decrease in the value of an asset over time. I mean, come on, your brand new gaming phone, after 1 year of playing BGMI and making all those Instagram reels, is it worth the same price? No way, right? That loss in value, that's depreciation. And for a business, it's a real expense. So, let's see how this works. Ankit has furniture that's worth 15,000 rupees. We figure out that its value went down by 10%. Which is 1,500 rupees. So, two effects, remember? First, we subtract this 1,500 from the value of the furniture on the balance sheet. And second, that same 1,500 is shown as an expense in the profit and loss account, which of course will reduce the final profit. Now listen very carefully, bacho. This next one confuses so many students. The difference between bad debts and provision for doubtful debts. Look, a bad debt is a confirmed loss. It's done. Paisa doob gaya.
You know for sure that customer is never going to pay you. But a provision, that's for an expected future loss. You have a doubt, shak hai ki paisa doobega. You're just being careful and creating a safety net. So one is a short loss, the other is just a maybe loss.
Now, to get this right in your exam, you have to follow these steps in this exact order. It's like a secret formula. Step 1, always start with the total debtors from your trial balance. Step 2, subtract any new bad debts, the ones they give you in the adjustments. Step 3, and only after that, on the amount that's left, do you calculate the new provision for doubtful debts. Follow this order, and I promise you will never make a mistake. Let's use our formula on Ankit's numbers. He started with debtors of $15,500. We found a clue about another $2,500 in bad debts, so we subtract that, leaving us with $13,000. Now, on this $13,000, we calculate our 5% provision, which is $650. So after all is said and done, the real amount Ankit can actually hope to get from his customers is 12,350 rupees.
And now, the moment of truth. We've followed all the clues, we've made all the adjustments, we've done all our detective work. It's time for the big reveal. Let's find out. What is Ankit's real profit?
Wow, just look at that difference. On the left is what Ankit thought his profit was, 19,500 rupees. But on the right, after we worked our magic, is the true, correct profit, 20,623 rupees. And look at Ankit. He went from confused to happy. That's the power of adjustments, my friends. They give you the true picture.
And with that, case closed. We did it. By finding all those hidden clues, we have successfully discovered Ankit's true profit in the real health of his business. Excellent work, detective team.
Okay, Bachcho, the story was fun, but now let's get serious for a minute. Let's talk about the most important part for your exams. I'm going to give you the ultimate cheat sheet that puts everything we just learned in one place. You might want to take a quick screenshot of this next one.
Here it is. This table, Bachcho, is your key to mastering adjustments. It tells you exactly what to do for each one, the effect on the P&L account and the effect on the balance sheet. See the pattern? Expenses get debited in the P&L, and the other effect hits either assets or liabilities. This table is your best friend for last-minute revision. Study it well, okay?
So what do you think? Are you ready to become an accounting detective for your exams? You now have all the skills you need to look past the simple numbers and find the true story. I have full faith in you. All the very best. Now go and ace your exams.